Welcome to Drill on Earnings. We've got earnings results from Microsoft. Mr. Softy, business story behind the one stock on a move. I'm the chief market strategist for Epistrophy Capital Research, Cory Johnson, here in San Francisco, far from the fine folks in Redmond. Q4 results from Microsoft, in Redmond, Washington, of course. So better than Wall Street expected. Wall Street looked for $68.8 billion in revenues. They got $69.6. Wall Street wanted $3.11 in earnings. They're $3.23. So what's not to like? Why is the stock selling off? Well, they said the results were really juiced by AI, but we only saw 12% revenue growth after spending billions and hearing that the company is going to spend tens of billions, $80 billion this year in CapEx on AI. So their cloud business was really strong, and their data center business was good, not maybe as great as some might have been expected, but their cloud business outgrew their overall business as it has for the last 4 quarters or so. So pretty solid, almost 20% growth, but flatlining a little bit. Profitability is also a little bit better, 35% operating profit margins there. But this is a business now dominated by the cloud. And you see the intelligent cloud at 37% and rapidly growing there, their fastest growing business. But that cloud growth rate is flattening, as I mentioned, only at about 20%. That's a little disconcerting here for this company that is gambling so much on AI and the cloud. So when after hours trading, we saw the stock down 2%. Checking the last minute, it's down 2% still in after hours trading. And for the year, up only 8%, even though it's such a big player in the world of AI. But during the conference call, CEO Satya Nadella talked about that. Of course, there are all these big concerns in the air about how much they're going to spend, and will that spending anytime end for years and years, or is it just now? Here's what Satya Nadella had to say.
I think DeepSeek has, had some real innovations, and that is some of the things that even OpenAI, found in 01. And so we are going to, obviously now that all gets commoditized and it's going to get broadly used. And the big beneficiaries of any software cycle like that is the customers, right? Because at the end of the day, if you think about it, right, what was the big lesson learned from client server to cloud? More people bought servers, except it was called cloud.
What's it all mean? Your big drill on earnings takeaway and one number that tells you a whole lot. I've got all that. So Q4 earnings from Microsoft, here's what we learned from this company. A decent quarter was $69.6 billion in revenue, but that's only up 12% on a year-over-year basis. So despite all the tens of billions they're investing in AI and data centers, the revenue growth rate's actually slowing down. And that's where we get the drill down earnings bite, the one number that tells us a whole lot. 19% growth rate in their fastest growing business, their cloud business, isn't great. Growth is not accelerating there. That's a little bit of a worry for investors. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson. Follow me at X at Cory TV. Please subscribe at Drill Down Pod on YouTube, on Instagram, or on TikTok.